So, hey everyone, welcome to this week's Books Crypto Club weekly catch-up on Zoom. It is Sunday the 13th of November 2022, and this week, mine may be a little bit different this week. We usually talk about blockchain, cryptocurrencies, NFTs, DeFis, ICOs, STOs, all sorts of three-letter acronyms. I have a feeling this week, however, we might be talking about the latest things that have been going on with one of the major crypto exchanges, FTX. We hold these sessions every week on a Sunday evening, 7 p.m. till 8 p.m. UK time, and everyone's welcome to come along, novices and experts alike. We use these sessions to learn, share, and educate. And so if you're a novice, you're more than welcome to come along and ask questions. If you're somebody who's more experienced and is running a project perhaps and would like to talk about it, then feel free to come along and we can talk about whatever it is that you're working on. Anyway, let's see what goes on. Hey, Jason, and Jeff, and Eric. We've got the legends on today. How's it all going?
Hey, Gary.
I usually sleep through your meetings, but today I got up early enough.
This is definitely worth being awake right now. There are some people who've been on Twitter streams for like, I think Mario did 36 hours at one point solidly.
Yeah, I've done about 8-9 hours today on and off. So it's just like working. It's crazy. Not even contributing, just listening and following the links and all the other kind of stuff that keeps evolving. We're gonna have like a following 12 months of like meme material that just writes itself.
Yep.
Oh yeah, no kidding, right? Yeah, I mean, I guess that at the very least we can say that we're anything but boring.
Yeah,
absolutely.
I mean, who the hell loses $8 billion, just in 3 days?
What do you say is he wants to give away all of his wealth and be like a philanthropist? It's like, well, you're halfway there.
Yeah.
We just didn't realize he also meant give everyone else's wealth away as well at the same time.
That's right.
That was part of the 16, so that was the catch.
Yeah, but it's been a crazy few days, I guess. I think everyone on this call is probably familiar with what's been happening. But Jason, I know that you actually did a session, I think it was yesterday with Kate, where you're doing a kind of a high-level review of what's been going on with FTX. Maybe if we could begin, would you like to just share some initial thoughts at a high level for anyone who is new to this? Just what on earth has happened over the last few days?
I'm too angry, to be honest with you.
Okay.
No, it's all right. It's true, but it's not. I'm old. And I'm experienced, and I'm cantankerous, and I'm skeptical. And I come from the traditional finance world, and I sat next to the audit profession my whole life. And for 5 years, I have watched crackheads and fruit flies give advice and lead other sheeple off a cliff. And so when I first got into crypto, this is the first thing I saw: accounting, audit, financial reporting, logical and immutable constraints over that information and those processes. So when I look at every single crypto project, other than the base layers, if you're building anything above the base layer, nobody in crypto has enough. I have to watch what I say. People aren't educated enough.
Maturity, experience
to demand financial disclosure. And I will never get over this, ever. I will never get over it. No drug in the world will calm me. That when the world's most sophisticated investors didn't demand internal controls, governance controls, disclosure controls, if only to protect their investment within the context of providing disclosure to the people who trusted FTX with custody over their assets. I'm beside myself.
So, Jason, you're talking about from a VC level, the people that invested them and gave them all this money to play with, all the way down to the 100-200 pound investor.
Well, yeah, I don't expect it from the 100-pound investor. I expect it from the VCs, and I expect it to be imposed for the benefit of those little people.
Yeah.
Right.
Not to mention
if it's not for those little people, then my VC investment's not going to be protected, right?
Yeah.
The world needs to know, and the problem is that the world has no clue what financial disclosure is. None. Zero. And nobody in crypto does. In fact, they know less than nothing. If they knew that they knew nothing, that would be something, but they don't.
So let's start off by position. Can I just level playing field on this for a minute, just so that if there is anyone who's completely new to the story and hasn't been switching Twitter on or anything for the last few days, let's just put the really high level thing. I'll offer a perspective to begin with, and we can work it from there. In simple terms, there are various crypto exchanges around the world, mixture of centralized, decentralized. One of the biggest ones is FTX. FTX been going for a number of years. Was set up by a guy called Sam Bankman-Fried, I think it is, who's typically known as SBF. And they set up a crypto exchange, which has been running for a while. And at some point, someone kind of said, well, how's it going with the assets and liabilities? And I think they posted some out to say, look, we've got $7 billion worth of liabilities, but we've got $12 billion worth of assets. So in terms of a solvency perspective, we're fine, okay? Then it transpired that of that $12 billion of assets that they held, something like, I think 7 billion of it was actually in their own FTT token. So this was a token that was used on exchange and so on. So all of a sudden they're saying that half of their capital was actually self-printed. So kind of actually worth nothing. So suddenly that means 7 million compared to 12 billion is actually 7 billion compared to 5 billion. So suddenly they are insolvent. And it kind of grew from there. And then the story unfolds of various other things going on as to why that happened, which we won't go into here, but ties in absolutely with Jason's point about transparency and all this kind of stuff. Then we saw in the news, there was a comment by CZ from Binance, who said he'd been asked to step in and he was looking at the books. And within 24 hours, he said, I'm not touching this, I'm not going near it type thing. Then things really started unfolding as we discovered that there's another part related to FTX, which is Alameda, which is kind of like an investment vehicle, a research vehicle. And it sounds like a lot of the funds were working their way. Actually, client funds may have been working their way out of the FTX exchange into Alameda and then being put into other investments. That's my understanding of it, and it might be that's just an opinion based on what I've read, so that is not legally accurate necessarily. Folks, you've all been watching this really closely the last few days. Is that broadly right at a high level?
Yeah, it's a good assessment. I wanted to address Jason's perspective because I think there's a component here that's missing, which is that traditional finance has largely been a very professional environment. The people who have large amounts of money don't manage it themselves because it frankly takes a lot of effort and time. And if you have a lot of money, then you certainly don't want to spend your time that way, right? And so you have fiduciary duties that, and a whole framework around the fiduciary duties for how to protect somebody else's money. The world of crypto, and so due diligence is part of that framework, right? Due diligence takes time, and there are two factors in crypto that kind of not prevent due diligence, but that make it unused. The first is that there are a lot of people that have made so much money that in crypto that they're very risk tolerant. And so they take a shotgun approach where they're going to take some percentage of their portfolio and say, this is just for completely speculative purposes. Who cares about due diligence? We're just going to throw it at this and that and see what sticks, right? And I think the VCs, even though they're professional money managers, they have been getting sucked into this kind of mentality. And the second part of it is that it just takes a long time to do due diligence. And if you take a long time, things move too quickly in this space. You're basically left behind, you're left out. So we see these large, sort of venerated institutions like Sequoia Capital getting their coattails caught in this horrific machine, but to some extent it's not incoherent with their strategy, because the venture capitalists generally have been much more risk tolerant than other layers of investors within the traditional finance world. And their approach is we know we're going to 90% of the stuff that we invest in is going to just crash, right? But we're looking for that 5%, that 10% that does so stellarly well that that we have our returns. And so that also discourages the kind of due diligence that is traditionally done. So that was my take on Jason's perspective.
I think that's good. I guess the other thing as well for everyone to be mindful of, for those who are watching the recording afterwards as well, is that there is a risk of a contagion effect right here, that this is directly affecting FTX, which is a major exchange. It's affected the FTT token, which then starts affecting other cryptos, and it gives a whole credibility kind of challenge. JT, thanks for joining. I know you were trying to get the point through earlier on Mario's tweet stream about, I think, trying not to spread FUD where it wasn't necessary to, I think.
Yeah. I mean, I know all of those folks for a long time, as you know. So, yeah, interesting, because majority looks like they've all shorted, you know, CRO. I understand how everything works in crypto, you know, and when I see too many people going for something, you know, it's just, it doesn't sound right to me, you know. There's something else, you know. It's true. Many things that was said, it's true, you know. I'm not disputing that. But I think what people are forgetting is that there's no exchange will survive if people start to do, I mean, they're like they were saying, yeah, and I'm a true believer, you should have your keys, right? It's as simple as that. But a lot of people like us have been on this for years and years, and we grew this space. We tried to bring a lot more people, and now it's just I hear people saying, yeah, everybody needs to get out all of their crypto from the exchange. But how? We were telling people to come since what, 2017, 18, and then everything dropped. But where majority of people came to crypto was 2020 onwards, yeah. And we told them, let's go, everybody coming, and then came NFTs, and then came gaming, and then came metaverse, and everybody joining the sexes. And now we're telling, yeah, get your money out, you know, to wallets. And they'll go, what? You know, they don't know how to do it, you know, very simple. They don't know how to manage the wallets. Just think about your experience. My first experience with MetaMask, you know, was horrible. And I'm a techie guy, you know. Imagine for someone who's not a techie guy. So my point is, and I'm trying to educate even today, everyone in our space, to say, stop, you know, spreading FUD until we actually know the facts, because you can't just go, let's everyone takes the crypto out of the sex. It's okay for you, for me, for everyone who knows about it. It's great. We already been doing that for a long time. What about all of those people that they do not, I mean, they just do not know how to do it, you know? So now we spreading all of this FUD, you know, a lot of it is true, okay, but there's a lot of FUD as well. And who's going to suffer are going to be those people. It's as simple as that. And those people never come back to crypto again. So in fact, we are imploding.
It gets worse. Yeah? It gets worse because you know who's educating them now? CNBC. And they know less than nothing about crypto, right?
Yeah, I agree, Jason. I agree.
And the people that CNBC bring onto their show as well as experts who are just influencers being paid by whoever. So it is a systemic circle. And just to point in your point, Fernando, about the MetaMask bit, which might relate into other news we might cover tonight. I popped up my own MetaMask transaction the other day because I went, oh, I don't want to pay that gas fee. I'll set it to what the, you know, what the proper gas rate is. I'm not paying 100 Gwei when the gas rate is 40.
I'm the same.
Yes, tight. I like it. And then I forgot I was trying to send some stable coin to another wallet, and I forgot to change the drop down. I set it to max, and I set my entire ETH stack to another wallet. Oh, now I have to put some more ETH in it. And I suspect that's what happened with Crypto.com this week as well, or yesterday, which was just unbelievably stupid. But yeah, I see Jason covering that.
Do you know what, Jeff? I told that exactly that. You know, well, on all of these talk crazy today, you know.
There's too much. It's like, what do we cover?
I mean, Gary and I had so many conversations. 95% of the time is just human error. It's not everything else is conspiracy theory. You know.
Yeah.
You know, it's just bad because people make mistakes. You know. And now, did I make mistake or not? You know what the question I asked Jeff to a lot of these guys that I've been speaking with for the last 3 days is very simple. So you know about that they send all of these crypto to Gate. They send it in October. So what's your point? What's exactly your point? Oh yeah, these, and they're saying, oh, they're going to collapse because of this, because of that. I said, yeah, but they send it, mistake or not. Maybe they're trying to acquire some company. Maybe there is some deal there with Gate. We don't
exactly.
know. But you know, what's the point? Yeah. And now everybody's fudding and saying, hey, they are in trouble. Just
so the reason
they sent 400 million?
Yeah, exactly. The reason why they sent it, that's obviously no one's ever going to know that because it's very internal. Yeah. And also, you know, I think the narrative that came out of the back of it was, oh, it was a mistake. And if it was a mistake on that kind of size, there must be some sort of multi-sig or operational controls to move that amount of funds. So again, it's like before, the narrative becomes cyclic. Oh, it was a mistake. It's been sent back. Why was it sent? It's not your business. All of this kind of stuff creates its own FUD cycle, regardless who knows the full story or not. Now, what we have seen in the crypto space is people have a goldfish memory, and in a week from now, people probably forget about it. Or a month,
you know,
or
Jeff,
whatever.
you know what the problem is. You know, look, Gabriel is a good friend of mine, yeah, and he's absolutely right when he came on. He said, take, you know, your crypto to your wallets, and he's right. You know, not your keys, not your crypto. We all know that, yeah.
Yeah.
But my point, I'm just worried, is all those 80% of people are there. They don't know what to do. They are relying on a sex, you know. Now, if people start to get the money back to their bank, believe me, no sex will survive. Not even Binance. I don't think even Binance has all their liquidity in cash, actual cash, to deposit that back to people's bank accounts. Yeah. So it will be the end of our space, in my perspective. So I'm quite worried. I think we need to start to educate people. And I think we need to start really to make sure that people understand that, you know, whatever they are saying are repercussions, because all of these people that are shorting, you know, they are making a pipe of money. And I am very suspicious about some of these actions at the moment, you know. And this goes back to, this is not new, okay? Some of us lost quite a bit of money when Crypto.com was Monaco, yeah? It was called Monaco, and then there was all of that rebranding and so on. And believe me, there's a lot of people still hate them, you know, since then. Yeah. You just go back to history.
MCO to CRO. And
yes, and a lot of people lost a lot of money.
And the dump,
early investors lost a lot of money, you know.
So looking at that, because it's interesting that what I keep hearing from people in the community, and I'm hearing it here. Oh, we need to educate people better. We have to educate the new people, which given I spend a lot of my time doing education in crypto and blockchain, I should be waving the flag for and saying, yeah, absolutely. But I actually think there's a more fundamental thing. The reason we're having to educate people on a lot of this stuff is because it's so difficult to do. So what we should actually do is not educate people on how to do difficult stuff. We should get on with designing and developing stuff that isn't difficult. And, you know, when a company can make a multi-$100 million transaction error, you know, that shows that even their systems aren't that great. And it was interesting on the call earlier on, there was a guy who said he was one of the original Crypto.com members. He was based out in Bulgaria, I think it was. And he was saying, look, the Crypto.com have got, you know, all the processes, procedures, the segregation of duty, the responsibilities, the signing limits, that they've got all of that, which some people are suspecting they haven't got. And he was going down the route of, oh, well, so that means that the only way this could have happened was if it was complicit. No, because still at the end of it, at some point, once it's gone through all that due diligence and sign off and approval, someone will have clicked that drop down. And just as Jeff says, might have inadvertently just clicked the wrong thing and no one noticed.
Same as that woman in Australia that had, what is it, like 1 or 2 or 10
4 million, wasn't it? 10 million.
Yeah. But it's,
So and yes, absolutely right, Gary. And that's also another thing. Yeah, I'm a cybersecurity guy. Yeah, it's very, very easy for a hacker to hack into systems. Okay, Just believe me on this, okay? They just needed a guy got into their systems and send some wallet to some other wallet. It doesn't matter what processes you have. You can have all the processes, 2 people signing the transactions, 3 people verified. If that wallet says that's the right wallet to send, yeah, then they will say, okay, I tick, I can see on my screen, this is the wallet.
Yep.
You just don't know it. There's maybe 2 days ago, 1 week ago, 1 month ago, a hacker went there and changed their wallet address to some other wallet address.
It's an internal source of truth.
You know how many
and they're trained to trust that internal source of truth.
Go on, Jason.
You know how many people print and screenshot their private keys?
Too many.
Yeah.
That's like leaving your wallet on Pall Mall.
Yeah.
And for right here.
And for some, that's probably still more secure than it could be. Okay, so the other thing to mention for those, again, who are new to this story, so we were talking about FTX exchange and all the problems with liquidity and everything like that. The next thing that then happened, because it's like peeling away layers of onion, this is going to be a film at some point. This is going to be better than The Big Short. It's going to be the crypto version of it. Was that?
Can't wait for that.
But the kind of the next thing that happened after all this started coming to light is, first of all, FTX US said we're not affected. It's only what part of business. That later transpired as being correct. FTX US then filed for Chapter 11 bankruptcy for protection. They then listed, I think it was about 170 associated companies or something, which subsequently it sounds like some of the companies they don't actually necessarily own. So it's kind of interesting. Maybe it's just a related party thing. But just at that point where they went into the Chapter 11 and everything was the point at which their own databases were hacked and all the data was deleted quite magically. So that ties in nicely with Fernando saying about cybersecurity, that you've then got the next thing of did someone external take an opportunity to hit a company that was clearly having problems? Or was it, as someone's suggesting, an internal thing?
Yeah, I suppose on that point, Gary, and I'll point this question to you, Fernando, with your experience and your, I suppose, knowledge. Did you see the other headline or tweets or information that came out today that the lead legal counsel for FTX was the guy ultimately behind the ultimate bet poker scandal from years ago? Yeah, who still has his license in the US for some reason. I remember seeing that documentary like a year and a half ago or something on my my poker YouTube account, and I watched a lot of that stuff just because it interests me. And the scale of that scandal was insane, and it has a lot of similarities there. So do you think that whole ultimate bet thing has some sort of stink to it that's in FTX as well?
I mean, the FTX is already known that they have, there's already inside information that they have scripts already created to wipe out all the information. So what that means is, yes, exactly. So what that means is there's a lot more into this story, but a lot more, yeah? And then we start to hearing a lot about him sponsoring both parties and playing politics. I mean, there's so much into this, the lady from Alameda, her dad was the boss of Gary Gensler, from SEC. Gary posted some document from the SEC that, FTX, the meeting with Sam Bankman-Fried early this year. I mean, there's a lot more for us to learn about what happened, and it's not going to be pretty. Yeah. So the fact that they had a script to delete and empty everything, someone is trying to cover the tracks there, because the money. Hold on, Gary. Let me just finish with this, please. Yeah, because the money must have come from somewhere. If there is no way to track the money that came from FTX, from who, how much, for them to be able to do this, I have no doubt, those young guys will not have the ability to pull what they have pulled, no doubt whatsoever, So there's a lot more behind this story, I think,
I agree there's a lot more. I'm just going to throw something in, though, because I often see people pick up a snippet of information and they go and run a mile with it. So I've been a database administrator in my career. I've written scripts to drop databases and create databases, to truncate databases.
You heard it here first. It was Gary's idea.
I deny it.
It was you.
But the reality is, any company should have those scripts. That's actually a normal thing. It doesn't mean they're planning to use them for nefarious purposes. All right. So, as a database administrator, I've always got a set of scripts that allow me to clean things up and everything, or even completely clear it down. That's not because I'm expecting a knock on the door from the FBI or something. It's simply a normal practice.
Yes, I agree with you on this.
And that's where we have to be careful. That when someone says, "Oh, I've seen they had this script that would delete a database," it's like, well, I would assume they would have. What's more interesting is, and this is where sometimes very clever people doing sneaky things don't think of the obvious, is, okay, so they've deleted the database. Do they take backups? Have they been deleting all the backups as well? Because if they have, that is a sign of absolute
and law and everything.
Exactly right. Yeah. So this is where a forensic review of what's happened is going to be interesting, in that'll unveil
Gary,
one of those things.
I agree with you, but the timing of it.
Yeah.
As soon as this started to go tits up, the database got deleted. What a coincidence with the timing. And that's what I don't believe, because when everybody's trying to find out where the money went, what was the current state, the database gets deleted. What a coincidence.
So have any of you looked into the connections of SBF with the WEF?
Yes.
I did, yes.
FTX is still up on the WEF's website.
No, it's not. I checked it about an hour ago because someone posted something on there. And if you go to the World Economic Forum's website on their partner list, and you go down to the letter F, FTX is not there.
Okay.
So I checked that because I was curious. I'm always suspicious because I run various WhatsApp groups, Telegram groups, and that kind of thing. When people post photos of websites or photos of tweets instead of links to the tweet or links to the website, I'm always a little bit nervous because they could always be doctored. And so when I saw that one, I think straight away I sent a link to say, well, I've just checked and it's not there. So I don't know, maybe it was that they were a member and it's been taken down. That very fast acting if it was.
Yeah, I mean, there's people trying to connect dots now with the WEF and, reset and all this stuff. I mean, we never know about these things, yeah, but I think we need to stick to facts and what we know. What we know is they were running is really badly, terribly, and they didn't have, I mean, just the fact that he had a script that he could bypass and transfer it up to 2 billion without the team knowing, him directly, that shows there's a lot of stuff that is not right there, so it was, I mean, I posted something today or yesterday, I don't remember, about one of the VCs that they came to pitch earlier, where the first thing that they say on their report was cowboys.
That was the Sequoia one.
That was not the Sequoia one, it was another one, Gary, that I can't remember what is the name, but I'll find it and I'll post it again, but it is a fact, those where did it come all of this money to give them the ability? I warned everyone in April last year about this, and people thought I was crazy and said, just put 20 graphs in 20 screens and you see the patterns are all equal, for every single coin that you put there. So they were running these bots, they were scamming people, shorting, longing, all the high leverage risks. And then, they did it on Terra. I don't know why, nobody knows why they provoked all of this. But my suspicions is that they wanted to really take #1 place and get the CZ down, and they were working with the regulators, and there's a lot of money behind them, because CZ and the team are Chinese and the Americans needed something American, I'm starting to connect all of the dots here. And CZ got pissed off, and rightly so. I admire CZ. I have high respect for the guy, okay? And we said quite a few truths today on the chat, yeah? But, we need to go back to last year when all of this stuff started to happen. And I warn everyone, just look at what FTX is doing. And nobody believed, and we had to come to this point. And it's not going to be good, guys. I really think, because now, all of them are out, the people that have caused this, and they're going to push for more exchanges. They're going to be a lot more FUD. They're going to try to provoke a run on the exchanges, because if that happens, regulators will come in every country, they will come out, and it's not going to be pretty, They're going to say, you see, this is all a scam, and we're done. I don't think it will take another 10 years at least, if we can recover, That's
it was interesting. Someone was making a comment earlier on about the regulators, and I agree. There's the risk that the regulators will just come in heavy-handed, and they'll just instantly over-regulate. And I've always been supportive of appropriate regulation. Jason, go for it.
I hate to say it, but Gary Gensler has been extremely consistent in his messaging about 90-year-old time-tested public policy. And the very people that are opposed to what Gary Gensler and the SEC stand for are the very people that are going to prove him right. And yes, I have been in the traditional financial services business my whole life, and I've lived under the SEC's regime. And the things that we had to do for compliance were just part of life. Got used to it. And, after what happened, first of all, they're not making any new legislation for crypto. Just because a thing that flickers on a ticker is made out of cryptography rather than paper or a book entry at DTC. They're just not. It carries too much political risk. And now there's no need to, because they're going to want this guy to run for president. The general public's going to want Gary Gensler to run for president.
Is that something we can take a side bet on? I'm trying to remember what the betting website was. But yeah, that's an interesting one. I just wanted to bring in a new voice from it. Gaz, I know that this isn't your space.
No, definitely not.
And I'm guessing Alina's just listening in and thinking, what on earth have I tuned into today? So, okay, no problem. Just showing that. Eric, in terms of what's going over on the West Coast at the moment, are you plugged into anything? Any comments or thoughts from your side?
Specifically on the West Coast, not particularly, but I do have some thoughts with regards to what Fernando was talking about earlier. I think we have an education problem, sure. We have a user interface problem. The technology is just is difficult to use. Things are too complex for the average individual, etc. So there is an education component to this, but I think we have a more fundamental problem. The bottom line is that any time that you want to trade, you have to surrender control over the coin. And there are really two ways to do the trade, right? Because Bitcoin doesn't guarantee, it guarantees the delivery of your coins to someone else, but it has no mechanisms to guarantee that something else will come back for it. Mm-hmm. So the answer to that, the answer really in general is the corruptibility of men. We need to take men out of the equation, and we have the capacity, right? We can replace them with machines today. So a decentralized exchange will never cheat you, right? If you audit the smart contracts, they all seem good. It's been in use for a while. Then you can have greater trust in a DEX than you can have in a centralized exchange, where there are always human beings making all kinds of decisions and have purview and control over your funds, essentially. Either that or don't trade, right? But not trading, it means you don't really have anything, because the whole point of this is that you can send it and you can exchange it in value, etc., in form. So I think we have a more fundamental problem, which is that The DEXs are good for the blockchain in which they exist, but we traditionally move value across blockchains and ultimately to the traditional financial system. And I think the answer ultimately is to create mechanisms, interoperability mechanisms between the blockchains, so that you can move value across and never really have to touch centralized exchanges. So centralized exchanges today serve really two purposes. The first is to trade two blockchain assets or a blockchain asset for fiat, but that's the second part, is actually they serve as on-ramping and off-ramping. And the discretion that they get over, so if you look at, when people talk about scam in the world of crypto, there are really two kinds of scams. There are the project guys who say, we're going to build all this kind of stuff, and we're raising money, and they take the money and they never build it, and they just go buy Lamborghinis, right? That's one kind. And the other kind is very clearly the exchanges. It's always the exchanges that are blowing up, right? So we need to take the exchanges out of the picture. An on-ramp process should be, here's $1 and here's a stable token that represents that dollar immediately returned to the wallet of the user. That way, there's no custodianship at the exchange at any point in time, and you're really only left with the due diligence necessary to invest in a project because it's exciting.
Okay,
so I think that's.
Can I bring Jeff in here, because I think he's been very, very polite in staying completely silent at this point, because we're kind of suggesting we replace Jeff with a smart contract.
I'm fine with that. Just my mind. No, I mean, I try to do more listening than talking these days, because there's some incredibly smart people on this call. I've only been in crypto 7 odd years, running CoinPass for like 5 of those. And, you know, everything the guys are saying here are exactly right. You know, the whole on-ramp, off-ramp thing directly to a stable token makes a lot of sense when all the liquidity and the user experience and all that kind of stuff matches up, but we're simply just not there yet. One thing that I think is crying foul right now is maybe more on the degen side than the regular investor or the institutional side is we want our crypto cake and eat it too. We hate KYC, we hate banks, blah, 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 blah. But then as soon as it goes tits up, it's there should have been better controls. How dare they steal my money? And I think that fine balance is, I suppose, kind of the narrative of the crypto space, right? Exchanges do their best and do a really good job and build really innovative products for people to use, and the majority of the people love them. And then as soon as one thing goes wrong or there's a 5-second delay, it's like the whole world is over. And I think it is, you know, one of the themes of this call is coming back down to education. There's just not, it should be every exchange's job. It should be every influencer's job to educate more people in the space, because that's the only way we bring more people in. From your regular investor, your mum and dad, your corporate, your institute, it doesn't matter. The education bit is still so poor. And something I'm trying to do at all times is just educate more people. But in terms of, you know, replacing exchanges to just stable, I think it's a pretty decent idea. We're just kind of, we're not really there just yet. When it comes to the, I suppose, choice of tokens as well, every time we've added another token on CoinPass, we simply just sell more Bitcoin and ETH. So I don't really get it. I worked at a casino for 6 years. I've got no interest in running one. So you'll never see our exchange with like 200-300 tokens on it. You just won't. What I can see us doing is more fiat currencies and more stable tokens to follow that kind of narrative, so people can go into an asset and then trade the cryptocurrency equivalent of it. That's where I see our platform developing over the next kind of 2 to 5 years.
Cool.
Yeah, the other side of this is that even though there's wrapped Bitcoin, that in itself is another great potential vulnerability, right? The wrapping or the bridging mechanisms, because if I buy USDC for my dollar, okay, at least I managed to get rid of the banking system part of it, right? But I don't really want to hold onto USDC because it has zero upside potential. I want to buy Bitcoin, and now I'm back to the problem, right? So, okay, wrap Bitcoin solves that solution, but it introduces a big honeypot there, and so that's also a technological.
You're talking about bridge vulnerability, right? Because effectively you're buying paper Bitcoin to swap back to in the future.
Exactly, and not only is there a vulnerability as a honeypot, but the other aspect of it, which comes right back to FTX, and they're by no means alone in this, is the shorting of Bitcoin, right? Because if you're sitting on a big pile of it and you're just sort of lending it, under the table, then what you're really doing is you're expanding the monetary supply of Bitcoin in this fictitious way, and it depresses the price, right? This is the game that they've always played with gold and with pretty much everything else.
Yeah.
So we need mechanisms where we deny participants in the system the ability to short.
It's funny, one of the things I loved originally about crypto was the fact that there was no way you could go overdrawn. And it was kind of much purer that you weren't fueling a debt-based economy, and you couldn't short it, you couldn't do all these sorts of derivative type things. And then it connected with people from financial services who said, hey, why don't we wrap this with whatever type thing? Jason, I just wanted to bring you back in on this because we're talking about education, talking about improving things, but transparency, is that one of your key things on this?
Transparency has been, ever since I got into crypto. And for those who are watching, I got into crypto because I had a fight with a regulator over an accounting, right? And it ended my banking career. My lawyer said there is no winning if you fight, there's only degrees of losing. And so I was very angry because of the way the regulators acted. So we have to face a reality for a minute. And to Jeff's point, in a way, the banking system is 1,000 times bigger than crypto. They've got infinitely more resources for propaganda and to brainwash the general public that you should trust us. We've been around for 200 years, 300 years. We're a known name, right? With the commercials, with the soccer mom and the 3 kids and the happy-go-lucky family environment. So moving society from centralized custody, which is what they want, to self-custody raises a lot of questions about our ability to assert muscle and, create a digital footprint that's effective in converting the minds of the masses. And to make matters worse, when an event like this happens, to the average person, it only proves that the banking system is right.
And in something as big as FTX, how can you expect people to want to get into it when something that big has done what it's done?
That's right.
Nobody's going to want to get into this space with things like that. It just takes them more away from it.
I walked into a restaurant last night and I could not defend myself. I ran out of energy, and they were too determined in their position after what had happened. My best bet was to just eat as quickly as I could and leave.
This is something that a bad exchange going bust is a good thing. No, it's a terrible thing. It basically points a target. I'm going to get bad heat, even though we have no exposure, no affiliation or anything, just because I'm also a CEO of an exchange. So now there's a target on everyone's back if you have any affiliation to the crypto asset class, regardless what business you're on. I could see wallet providers, staking providers, technology. Everyone's going to be affected from this in a negative way.
Yeah,
it's going to take a very, very, very long time for it to come out.
Here's the thing.
If a bank goes under, right, or if it's found that a bank has committed malfeasance and they have to pay a big fine or something, everybody says, oh, well, there's always a few bad apples. But if a crypto exchange goes bad, it's like the whole space is just a scam.
Yeah. The thing is,
so we have to get our house in order if this is ever going to take off.
The house in order is this. Here is an orderly house. You ready? If you go to sec.gov and you search for company filings and you enter COIN, click go, you will see a list of financial disclosure documents. That is the model for a centralized exchange. Same with NASDAQ, same with ICE, and I believe Chicago Merc. I forget who else. But
UK FCA Crypto Asset Register.
there you go.
All 36 companies, I think it is, including Jeff's CoinPass.
38 if you count.
38.
If you count both the Geminis, maybe they lost the login for one of them. I don't know.
Yeah.
The point is this: machine readable financial disclosure and analysis is the model. And I've been the most unpopular person in crypto. I don't get invited anywhere. I don't have any air anywhere. I'm not an influencer because since I came into the space, this is what I've been working on. And nobody, first of all, nobody understands it. And the ones that do, they didn't want anything to do with it because they were making too much money. Right? So, you know, what does a project like us do? They wait for an event like this to come around, right? So centralized exchanges, if they want to live, and I don't mean to cast any aspersions on CoinPass, Jeff, who knows, maybe after this show, you'll be the first to provide your account holders who you hold custody for complete IFRS or UK GAAP financial disclosure with proof of reserve. Proof of reserves by themselves is a joke. It's a joke.
The ones that have been posted are a joke because they're just a graph.
Yeah.
The only thing proof of reserves is good for is an entity that does nothing but take in $1, issue a token like a USDC, and nothing else. But once, God bless you. Once you have other business activities that take into consideration cash flow, a P&L statement, operating losses or profits, the amortization of write-offs, impairments, all this stuff that gets articulated in financial disclosures for an operating company, proof of reserves is worthless. That doesn't do anything. In fact, there are accounting firms that are selling that as a product to everyone that they could, knowing full well that with no US GAAP or IFRS or UK GAAP context, it's worthless.
I thought it was interesting earlier on today on the call that many of us were on. Brad Garlinghouse? Brad Garling, who's the CEO of Ripple, came on. Mm-hmm. And the thing I found fascinating, what he was saying all the time, he was constantly saying about the importance of transparency in this market and how it's important to be transparent. And then when he was being asked questions directly about certain things, he was...
But the thing is, they all talk the same words, Gary, you know? It's just same words. And I'm honestly, I'm tired of listening to all of those bullshitters, you know? Because they always come and talk, but in fact, they never do the things that they actually preach.
They don't know how to do it.
Yeah,
and
exactly.
they don't want to ask their attorneys because their attorneys don't want to tell them how to do it, because that means they're only going to earn $500,000 as opposed to $10 million in legal fees, right?
Yeah, and
the best thing an attorney can do is to take their client, push them over the cliff, take a lasso, throw it around them, pull them back and say, you see, I saved you. Here's my bill for 10
the biggest problem that I see really is that I mean, people are talking so much crap at the moment. It's just unbelievable. You know, it is the end user, you know. We told them all, come, look how great all of this is, crypto and NFTs and metaverses and so on, yeah? And now we're telling these people, yeah, go get yourself educated and get a wallet. You know, first question, why people put money in the bank, yeah? Because they don't feel safe in storing under the I don't know, the mattress or whatever, yeah? That's why they put the money in the bank, majority of people, yeah? Do you think, I mean, do these people think even for a minute, you know, that crypto is going to take off with the current wallets and the way people set up all of these wallets? It's never going to happen. for many different reasons. Yeah, a big number of people, yeah, do not know. I will say the majority. And then there's the security aspect. A lot of people have their devices already compromised. You know, you just go to the dark net, you see how many millions of bots. There are guys who have farms of millions of devices, and they have already the devices compromised. So these bots, just at 2 or 3 instructions, they will start to attack any network, and you don't even know that your phone or your laptop at home is attacking a network. Okay, it's as simple as that. Getting this crypto to the crypto that people have on central exchanges, even if they get educated and they can set up a wallet, it's going to create so many problems, because this crypto is going to disappear from people's computers, on people's phones. Yeah, because they are not educated. They click on every single fucking link that somebody friend sends them, you know? That's it, you're infected, you know? Believe me on these guys, this is going to be worse than ever. My only faith is that, you know, there's a few look, how to solve this problem? Smart contracts. Okay, fair enough. You have a wallet, you connect smart contracts, you put the stuff there. It's not on your computer, you have some keys somewhere, but smart contracts get hacked left, right, and center constantly, you know, not safe either, you know, unless if you get some really good stuff like Gnosis, you know. Gnosis seems to be surviving, you know, which means that they are safe for now, yeah, in terms of smart contracts. But not, you know, it doesn't mean they will be safe forever, yeah. So there is no secret to this. So somehow we need to find ways for that custody of the crypto from the end user to be somewhere else, automated, off-chain, doesn't matter. What you see, what you have is just a user interface that recognizes your face. I know some people doing cool stuff, you know, there's a project called Lifeform, I think I mentioned this before, with avatars and so on, and it just, you know, recognizes who you are, and it logs you in straight away. You don't need to set up any fucking key or whatever, remember something, you know. We need, like you said, Gary, until we make this easy for people, seamless, you know, yep, for people to use, it's going to be a catastrophe. All of these places.
No, but we have hardware wallets, right? Those solve the problem of hackability.
But people know, Eric, I understand that. We know this, yeah? Not a problem. Majority of people out there, they do not know how to use it. You know?
Yeah, and that's our fault. We should be telling,
exactly.
We tell all of our customers,
I don't
hardware
think
wallets. That's
the
it.
education is not, look, people are stupid.
Yeah, I agree with you.
People are stupid.
Yep.
Give them one button to click, that's idiot proof, and that's it. If you can't do that, we're going to have problems.
I did see an interview with CZ saying that if he had the time, he'd make a wallet what's easy for people to use. If he had the time.
I don't know if
he does, but that's what he said. That's what I seen in an interview.
Yes, absolutely. And that's the main issue here, you know. All of these people been trying to create wallets. I just don't get it, you know. I might just take myself some time out and create one as well, because you have to make it seamless, you know, for the user. No.
Yeah.
Look, let's go back to something, and I think Gary and I spoke about this before. Think about why iPhone took off from everyone else at the time.
No buttons.
They make it very simple,
very easy to use.
Interface. The people just click there. That's it, you know.
What about Google? Google. When you land on Google, what do you see? Nothing. A space bar. That's it.
I saw we're going through mobile app redesign last year, and I found a really good UX guy here in the UK. It didn't work for us, but he does a lot of case studies, and it was around neobanks versus tier 1 banks in terms of their user experience, and how tier 1 banks are losing more people, not because of the services they provide, but because of the UX experience and the number of clicks and interactions to actually get onboarded. And that's why Revolut is killing everyone, because their onboarding is like 19 clicks versus like HSBC, which is about 47. And people just won't click 47 times. People can tolerate this many. And purely from user experience alone, that's how they were dominating the market. So you're right, one button, nice and simple. I can't see anything else but one thing at a time. People's attention spans are just getting shorter and shorter and shorter. And as crypto is complex, no one's going to come in at the top of the funnel. They're only going to come in at the very end.
And I think it's a point.
We post something, we provide an answer in a post. And what do you think somebody does? They ask the very question to which they gave the answer to.
Yeah.
And what we have to do is reply with the finger in Telegram. Here's the
Yeah.
answer. We just
Yeah.
gave it to you.
Or the
You remember, Jason, do you remember, I don't know if you remember, we were with Nick Spanos one time in, I think it was last year, having breakfast at a hotel in Dubai. And we were talking about Telegram and hacking and so on, you know, and we talk about this. And I said, listen, we have to make it easy for the user to log into any, doesn't matter, chat, wallet. And I was already telling so many people last year, we need someone to create a fucking wallet that is easy for everyone, because it's going to be a catastrophe. Do you know how many people joined crypto last year that were non-crypto people? Fucking loads, tens of millions, you know?
Yep.
So those other people going to suffer.
And those tens of millions of people snapshotted their private keys and printed them.
or put them in Google in a notepad.
Yeah.
Right.
Okay. Okay.
Well,
Folks,
yeah, Jeff is right.
we've got 5 minutes left, so I'm going to throw a bit of oil in the fire or whatever it is. So you're talking about the usable experience, making life easier for everyone, wallets, blah, 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 blah. Elon Musk, Twitter has got a crypto payments capability built into it. Do you think there's the potential that he's acquired Twitter to start developing exactly what you're describing, which effectively is going to be the WeChat of the West?
Yes.
With payments right now?
Absolutely.
Yes.
Yeah.
He's already thrown the term.
well-
He's already thrown the term super app out there, and that's kind of the buzzword for anything fintech at the moment.
And I tell you more, the token is going to be Doge. I have no fucking doubt about that.
And he needs to be shot and killed.
It will, Jason. I'm telling you, it's going to be Doge. He has
Look,
so many fucking
Doge,
you know?
You can literally measure the value of stupidity in the world by looking at Doge. That is a mimetic stupidity meter.
Yeah, you said people are stupid.
Yeah.
That's it. You know, I agree with you, mate. I agree with you.
So all we're doing with Doge, and we're allowing a means of quantifying the stupidity of just how stupid kind of thing. So that's a valid thing, and maybe it's something to watch out. So, but again, this is the whole crazy world of how do we educate people to those kind of risks? Or is everyone just going to go down the route of, oh, Doge to the moon, buy into it, buy into the hype, blah, 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 tulip bulb fields collapse type thing? Is there anything we can do to help people help themselves?
I think exchanges should provide full financial disclosure. The one who's the first to do, well, there is the first, Coinbase. The second one, there's going to be a big winner. And the third. The ones that do it are going to win. The ones that don't are going to be suspect, that they're going to be hiding something. Why don't you want to provide disclosure? Separate custody from trade. There isn't a single traditional exchange that holds custody. Not a one.
I agree with you. And they don't want, because all of them last year, I have no doubt that all of them were doing some orthodox stuff, you know?
So this all comes back to the other mantra that we keep preaching amongst many others, which is not your keys, not your crypto. And I was having a conversation with someone earlier on who was saying, why do people put their keys onto an exchange or leave their keys on an exchange? And I said it's two reasons. One is that they don't know any better, which comes back to the education piece. And the second is that they're lazy and people will take the path of least resistance type thing.
Well, they don't keep their keys on an exchange. The exchange issues the key.
Yeah.
Right?
Well, you're absolutely right for pulling me up on that, because I'm one of the worst people for being pedantic about this. But ultimately it's that you don't have the keys yourself, which is the kind of challenge.
Coming back to your question, what we can do and so on, the main thing is, you know, let's stop spreading FUD, because it's, you know, most of it is fake, you know. It's okay to say, yeah, well, you know, crypto.com moved 400 million and ask question why. It's okay, yeah, not a problem at all. And then they will give the answer. But those guys were not happy with the answer. So they started the FUD, you know, the FUD continues. The fact is, we don't know yet why, what happened, you know. Until we do that, I think the responsibility of everyone is really, you know, take a step back. Don't spread all of this stuff. Yeah, it's okay to ask questions and leave it like that, you know.
Yeah, I think there is the risk of self-fulfilling prophecies in this space. And
Yes.
that's sometimes the risk that
Yeah.
you don't know why people are doing it. Are they doing it? They're asking questions through naivety, or are they doing it with a malicious intent because they've gone off and shorted somebody? Folks, I'm conscious of the time, and Jeff's just looked at his watch as well. I think he's got
No, it was 8 o'clock. Ding. I was looking
Yep,
at the thing.
which is perfect. I try and wrap these up on the hour anyway. So I just want to say thank you very much, everyone who's come along today. Really interesting. Jason, I hope you're not too depressed and things will improve.
I'm sorry if I offended anybody.
No,
But for those at the UK, I'll be at the Crypto AM Summit on the 22nd through the 24th.
Boom. I'll see you there, Jason.
And Jeff, we should talk.
Yeah, we should.
That's a great one. Folks, have a great day. Have a great evening. For those who are watching on YouTube, click like, subscribe. See you all again.
Yeah, bye.
Gary, one statement. We're gonna make it. Wag me. We're gonna make it. Despite of what's happening, we're still gonna make it.
He means we'll survive as
Yeah. As someone said on a call earlier on today, look, despite all of this, blockchain still hasn't been broken into. It's still immutable. The network's still running. Bitcoin's still working. You know, the infrastructure is still there. It's just the stuff on top of it's just cracking at times. So yeah, we will get there, folks. Have a great day with that. Cheers.
All right.
Bye now.
Bye.